Good morning, everyone. Welcome back to CA Foundation Principles and Practice of Accounting. We were discussing the topic of average due date, chapter 6, unit 4 before break. So far, we've done till question number 3. Let's now start with question number 4. Question number 4. What does question number 4 say? A trader having accepted the following several bills falling due on different dates now decides to have these bills cancelled and to accept a new bill for the whole amount payable on the average due date. So there are several bills which are outstanding to be paid on several days. They want to settle them all on one day. They want to settle all the bills on one day with only one bill. Now we will find the average bill for all of these bills together. The date on which the average bill will come out. That is the date for which we'll sign the new bill. And that will be for the total amount 400, 300, 200, 275, and 500 together. Shall we start? Okay. Let's write the basic data what they have given in the question first. Date of the bill 1st March, 10th March, 5th April, 20th April, and 11th May. Then, bill period is 23212. 23212. So this is the period. Now let's find due date. Shall we find due date? 1st of March 2020. From there 2 months. 1st of April, 1st of May. From 1st of May we'll add 3 more grace days. 2nd, 3rd, 4th. 4th of May 2020. Got it? After that, 10th of March 2020. From there 3 months. 10th of April, 10th of May, 10th of June, 11th, 12th, 13th. 13th of June. 5th of April plus 2 months. 5th of April, 5th of May, 5th of June. 6, 7, 8. 8th of June. Then 20th April plus 1 month is 20th May plus 3 days. 21, 22, 23. 23rd May. Then we have 11th of May plus 2 months. 11th of June, 11th of July. 12, 13, 14. 14th of July. Clear? Very good. Amounts have also been given to us. 400, 300, 200, 375 and 500. Let's find the period. The earliest of the due dates is 4th of May. That's the base date. We'll find the period from base date to due date. 4th May to 4th May, period is 0. 4th May to 13th of June. Listen to me. May has how many days? 31 days. If 4 days is over out of 31, we're left with 27 days of May plus 13 days of June. 40. Next, 27 days of May plus 8 days of June. 35. 27. Okay. 23 minus 4. 19 days of May. 23rd, no? Same month. 23 minus 4. 19 days. Next, up to 14th July. So, 31st minus 4. 27 days in May plus 30 days in June plus 14 days in July. 71. July. 71. Oh, sorry. 71. Did you get it? Now, let's find the product. Shall we? 0 into 400. 300 into 40. 35 into 200. 7,000. 19 into 375. 71 into 500. Now find the total of the product and total of amounts. 61, 625, 1775. Average unit is base date of 4th of May plus 61, 625 divided by 1775. That is 4th May plus 34 point 34.71 days. That is nothing but 35 days. Sorry, 35 days. Let's add 35. What do we get? 39th of May. 39th of May is not there. May has only 31 days. If you deduct 31, you get 8. 8 days in the next month. 8th of June is the answer. Is there any difficulty in this? That's it. Will you quickly copy? Quickly copy 4th one. Come on, copy 4th one. Then we'll go to 5th one. Let's now go to illustration number 5. This is little different. Till now, it was supposed to be like one person is supposed to pay, other person is supposed to receive. We only had bills receivable or we only had bills payable. Here there are both. There is amount receivable as well as amount payable. Then what do we do? Very simple. Amount receivable will be plus. Amount payable will be written as minus. Rest everything is same. Find the period similarly, find the product similarly, take the total and then apply the formula. But in presentation, what ICA does is they write all the minus items separately, all the plus items separately. And when you do the formula, rather than writing it as base date plus total product by total amount, they write base date plus product A minus product B divided by amount A minus amount B. Difference between products and difference between amounts. Actually, you can do it all in one table. Amount payable you'll write minus, amount receivable you'll write plus. That's how it should be done. That's how it can be done. But minus items they're doing as a separate table. That's not going to be any difficult to us. So they only segregated and then given two tables to us. Goods sold by X to Y. So for X it is receivable. Goods sold by Y to X. For Y it is receivable. So for X it is payable. So take the side of X and then do this 60, 70, 80 one table, 52 and 50 one table. Total product from here minus total product from here. Divided by total amount here minus total amount here. And simple, you will find the average rate. Shall we do it? But you pick the common base date for both. If you pick another base date, then again you should find average of those two average due dates what you got. So the base date for both the tables will be common. Amount receivable by X for the goods sold by X to Y. What is the amounts? What are the dates? April 18th, then May 15th, then June 17th. What is the period? So they've told it's other than 1 month credit. Sold each other allowing 1 month credit. So what is the credit period? 1 month. So if you add 1 month, what do we get? 18th of April plus 1 month. 21st of, it is 18th of May. It is 15th of June and it is 17th of July. Sir, why not 3 grace days? It is credit period. It is not bills of exchange. It is credit period. It is not 3 grace days will come only for bills of exchange. This is not bill period. This is credit period. This is goods transacted. This is not bills of exchange. So you won't give 3 grace days. It is supposed to be paid after 1 month. It will be paid after 1 month. Where do we give 3 grace days? In bills of exchange chapter. Is this bills of exchange? No. I've sold goods today. I'll tell pay me within 1 month. 1 month is the last date. No 3 grace days. 3 grace days only if there is bill of exchange. Did you all get this? Very good. Underline that credit period. 1 month credit. Underline that. Right there. Not bill period. Not bill period. So no 3 grace days. Underline that and write. Not bill period. So no 3 grace days. No 3 grace days. Wrote it? You won't give 3 grace days. Okay? Come back here. Period will be okay. We'll write that for the other one also and then see the period. Amounts are 60, 70 and 80. Do it for the other table because we need to take common base date for both the tables. Earliest is what we'll take. What is the amount payable by X for the goods sold by Y to X? Sold by Y to X. We'll see the entire thing from the perspective of X. Here it is sales to X. Here it is purchase to X. What are the dates? April 23rd and May 24th. Then what do we have? 52 and 50. 52 and 50. Credit period is 1 month. So this will become 23rd May and this will become 24th June. Base period is, base date. What is it? 23rd May is the earliest year. Here we have 18th May. Shall we take 18th May as base date? Now come on. Taking 18th May as base date. Here there is no 3 grace days. It is transaction plus credit period. 18th of May to 18th of May is 0. 18th of May to 15th of June. May has 31 days. How many days are there in May? 31 minus 18. 13 days in May. How many days in June? 15 days in June. 13 plus 15. 28. Here, 13 days in May. Take your calculator. 30 days in June plus 17 days in July. 60. 0 into 60, 0. 28 into 70, 1960. 60 into 80, together 6760. Here 210. Am I right? Come on, we'll do it here also. So date is 18th May. 18th May to 23rd May is 5 days. 18th May to 24th June, that is 13 days in May, 24 days in June. That is one. Find the product. 5 into 52, 260. 37 into 50, together 110. Amount 102. Now we'll take the difference. 6760 minus 2110. 210 minus 102. That's how it should be done. No? These items could have been included in this table as minus item, but we were done separately. 18th of May is the base date plus 6760 minus 2110. Amount is 210 minus 102. What do we get? Divided. 43.05 days. Even if it is 43.01, it is 44. 44. We'll add 44 days. 18th of May plus 44. 18 plus 44. 52, 62. 62 days are not there in May. Minus 31. 31st of June. Is there 31st of June? Minus 30. 1st of July 2022 is the answer. Did you understand? Remember that what is given in the question is date of purchase, not bill date. And what is given in the question is credit period, not bill period. So no grace days allowed, and due date is 1 month from the date of purchase or sale. You get it? Any doubt? Did you understand 1st of July as answer? Copy. Bega. 5th one. Next, we go into question number 6. Question number, can I have your attention? Everyone, have a look at question number 6. For goods sold, N draws the following bills on R, who accepts the same as per terms. First, we'll write this data, compute average rate, and then read whatever they've given. Date of drawing, date of acceptance, and tenure. Some bills are after date, some bills are after sight. If it is bill after date, date of bill date is date of drawing. If it is bill after sight, bill date is date of acceptance. Bill period is counted from bill date. Sometimes that bill date is date of drawing, sometimes it is date of acceptance, depends upon the type of bill. Let's write bill date. For the first one, see, observe, it is after date, so it is date of drawing. Bill after date, date of drawing. Bill after date, date of drawing. Bill after sight, date of acceptance. So bill date is 6th January, 15th February, 21st February, and 17th March. Shall I read? Yes. 6th January. Then 15th February, 21st February, and 17th March. This is date of acceptance. For other things, it is date of drawings. And tenure of the bill is also given. 360 to 30. 360 to 30. Don't convert 30 days as 1 month, 60 days as 2 months. Or don't convert 3 months as 90 days. If they've given months, compute in months. If they've given days, then compute in days. So 6th of January plus 3 months. February, March, April. 6th of April plus 3 days. 7th, 8th, 9th. 9th of, very good. 9th of April 2007. Here they've given 60 days. 15 plus 60. 75. 75 plus 3. 78 days. 78th of February. Does February has 78 days? It has 28. Minus 28. 50th March. Is there 50th March? No. March has 31. Minus 31. 19th of April. Then 21st of February. Plus 2 months. 21st of March. 21st of April. Plus 3 days. 22nd, 23rd, 24th. 24th of April 2007. Then we have 17th of March plus 30 days. 47th of March. Is that 47th? There is how many days? 31. Minus 30. 16th April plus 3 grace days. 19th of April. Clear? Anyone who did not understand this day's computation? Now come on. Let's compute period. Earliest is 9th of April. 9th of April is base date. 0. 9th of April to 19th April, 10 days. 24 minus 9, 15. And 19 minus 9, 10 days. So amounts are given in the question. What are the amounts? 8, 9, 8, 15. 8, 9, 8, 15. 8 into 0, 0. 9 into 10, 90. 8 into 15, 15 into 10, 1 lakh 50. 2 lakh 70 plus 90, 3 lakh 60. Here 15 plus 8, 23, 32, 40. 3 lakh 60 and 40,000. Am I right? Base date is 9th April. 9th April plus 3 lakh 60 divided by 40. 9th April plus 9 days. That is 18th of April 2007. Got this? This is average rate. This is not the end of the answer. We have not read the rest of the question. Read. On 18th March 2007, it has agreed that the above bills will be withdrawn and the acceptor will pay the whole amount in one lump sum by a check. Whole amount by one lump sum by a check. 15 days ahead of the average rate, and for this rebate of 1000 will be allowed. Okay, calculate the average due date. We calculated the average date, 18th of April. And they're telling the money will be paid when? On 18th of March, it is agreed that the above bills will be withdrawn and acceptor will pay the whole amount in a one lump sum check. 18th of March, they are agreeing to withdraw. Sir, then we should compute interest for 18th March to 18th April. But they're saying 15 days ahead of average due date. What is this? Isn't this confusing? Shall I tell? Read it, try and understand. They've told 15 days, they've told 1 month here. Here 18th of April is there. 18th of April to 18th March. Should I compute 1 month interest or 1 month discount or 15 days? What are they trying to tell? 15 days. But they've also told 1000. Shall I ask you my question? What is the average rate that we computed? What is the date they've given in the question? Is it 15 days before average due date? Okay. Then, should you compute interest or discount for 1 month or 15 days is first question. Second question. They've told 1000 rupees already. What is that nonsense now? What do we do? Think. Read the question, think. I will tell the answer. You'll be like, "Chee, thoo, yen sir idu." We are no 1 month is what we should compute. Then why did they tell 15 days? If they tell 15 days, then why did they tell 1000? Then there is no point in doing average due date only, sir. 18th March plus 15 days, you do write the date as average due date. 15 days ke 1000 rupees they have given, deduct 1000 and then pay the rest. Understood? Huh? You understood? Just wait. No. You understood the answer. You thought you know, or you're clear that you understood what is the trick. Okay, let's wait for others. I'll take your answer first. Let me just wait for others. Anybody? Helappa. They have not given interest rate. Okay. Okay. Let's say they've given interest rate. Then what do you do? You do it for 15 days or 1 month. Then why have they given 18th March? Okay. So discount, that is interest saved. You should pay less. So if they had given interest rate, then what is it that you would have done? Not on 1 month. Why on 15 days? Then what is the point of 18th March? Correct. You know what is happening? 18th March, they just agreed. They didn't give amount. 18th March, they spoke. They cancelled all the bills. They wrote one new check. New check. In that check, they should write date. No. That should be 15 days before average due date. What is that date? They don't know. That should be 15 days before average due date. Average due date is 18th of April. 15 days before average due date. 3rd of April. They should write 3rd of April dates check on 18th of March. They can write that check on 1st of March. They can write that check on 1st of whenever they want to write. It is not the date on which the check is written. It is a check. It is a date that is there on the check. When they are writing a check, calendar li yav date ide alla. A check mele yav date ide anta. On that check, you should write date. What date should you write? Date which is 15 days before average due date. So that 100,000 rupees discount is also given there. So 18th of April is the average due date. Average due date. And then the date of payment is average due date minus 15 days. 18th of April minus 15 is 3rd of April. Amount to be paid is, what is that amount here? 40 minus 1000 rupees rebate. 39,000. Did you get this? It looked tricky, but it is not tricky. It is easy. You should not get confused. Ashte. Will you copy? Come on, copy quick. Sixth one. Yes, sir. They'll say speed breaker ahead. Average due date ahead is enta. Correct? No. They'll say dead end ahead. They'll tell flyover ahead in the road. What do you mean when they say ahead? Adadmele flyover ಇದೆ ಅಂತ. ಮುಂದಕ್ಕಿದೆ ಅಂತ. 15 days ahead. They say 50 meters ahead ಅಂತಾರಲ್ಲ. ಅದರ 15 days ahead. 10 days ahead of his wedding, he did skydiving. Ahead is not an event. 15 days is the period between that event and the. Yes, sir. 15 days ahead means you're paying before average due date. English. See, the problem is you all English medium kids know. I'll solve the next one. There was enough time to do. Have a look. Illustration number 7. Shh. I want some silence. Amar accepted the following bills drawn by Pawan. Okay. Date 8th March. Bill date is 8th March. Bill period is 4 months. Amount is 16,000. Then 16th March 20,000 3 months. 16th March 3 months 20,000. Bill number 3. 7th April 24,000 5 months. 7th April 24,000 5 months. Last one 17th May 20,000 3 months. 17th May 3 months 20,000. Now let's quickly find our due dates and then find average due date. Then let's read the rest of the question. I want your attention. 8th of March plus 4 months is 8th of July plus 3 grace days 11th of July. This is not how it's going to be. This is going to be bill date tenure plus 3 grace days. 16th of March plus 3 months is 16th of June plus 3 grace days will come to 19th of June. 7th of April plus 5 months is 7th of September plus 3 grace days 10th of September. 17th May plus 3 months 17th of August plus 3 days is 20th of August. The period for this will be found keeping 19th of June as base date. 19th of June to 19th of June is 0. 19th of June to 11th of September. June has 30 days. In that 19 days are gone. Remaining is 11 days of June, 11 days of July. Together it is 22 days. Here 19th of June to 10th of September. 11 days in June, 31 days in July, 31 days in August plus 10 days in September. 83. 11 days in June plus 31 days in July plus 31 days in August plus 10 days in September. I am asking till 10th of September. You are telling till 20th of August, 60th. 83, not 82. If you take July as 31 days, August as 30 days or vice versa, you will get 82 days. July and August both have 31 days. Representing Julius and Augustus who are two good friends. They both have equal days. Next, 20th of August, 19th of June to 20th of August. June 11 days, July 31 days, August 20 days. 60, 22 into 16. 3,52,000. 20,000 into 0, 0. 83 into 24,000. 62 into 20,000. Together 21, 31, 31 lakh 32, 34 lakh 90, sorry, 35 lakh 84. Here total 44, 50, 60, 80. Then average rate will be 19th June plus 35 lakh 84 divided by 80,000. 44 point, that will be 45 days. 19 plus 45, 64. There is no 64 days in June. It has only 30. Minus 30. 34. 34th of July is also not there. Minus 31. 3rd of August is the average due date. 3rd of August is the easy. Now let's read the next part of the question. He wants to pay all the bills on one single day. That day should be 3rd of August. Find out this date. I finding out. Interest is charged at 18%. Okay. And Amar wants to save 628 by way of interest. Till now, they used to tell the date of payment. We used to find the period of delay. And for the period, we need to find the interest. Here, they've told interest. They've told we should find the period. They told, I want to pay 628 rupees less. If interest is at 18%, when should I pay? See, interest is equal to P into T into R. Till now, we should not know interest. We should do P into T into R and find interest. Here, we know interest is 628. Principal amount we know 16 plus 20 plus 24 plus 20, 80,000. Time we don't know. Rate of interest 18%. Can we find the period for which interest will be 628? Come on, let us do it. Interest. See, if Amar wants to pay Pawan on 3rd of August, there will be no interest payable or receivable. However, Amar wants to save 628 by way of interest. So, he should pay certain days before. How many days before? That we are trying to find. Interest is P into T into R. 80,000 into T into 18%. How much is T? 80,000 into 18% is how much? 14,000. Okay, 628 divided by 14,400. 0.046. Round it off to 1 now. That is years. That is why interest what we've taken 18% is per annum. So this is 0.0436 years. Multiply it by 365 days. 15.91 days. That is nothing but 16 days. We should pay 16 days before 3rd of August. We should pay 16 days before. 3 days before is July month. In July month, how many days are there? 31. 31 minus 13. 18th of July. Sir, how, sir? See, 3rd of August, from there you should go 16 days backward. In August month, there are only 3 days that we can go backward. 16 minus 3. 13 more days we should deduct in July. Before August is July. July has 31 days. 31 minus 13. How much? 18th of August. Sorry, July. 3rd of August minus 16 days is 18th of July. Sir, I doubt this is correct. Okay, simple. Do 18 plus 16. 18 plus 16? 34. 34 is not there. Minus 31. Are you getting it? Sir, instead, is there any other way to do? Yeah, I'll tell. Because sir, month adding, no sir, I'm finding it easy. Reduction, I don't know sir, I'm finding it difficult. How many of you find addition easy now? If you do like this, you find it easy? Okay, now we'll do minus also. Minus 16. Minus, do it like how you do only. Simple. 3 minus 16. There is no minus 13 days in August. Correct or not? So we'll write here plus 31. Correct or not? If you do plus 31 here, you go to minus 1. So what do we get? Yeah. Correct. No, when you go backwards, here we did minus 1. Here if you would have done minus, here I would have done plus. If you go forward, it will go to next month. If you go backward, it will go to previous month. There are 31 days. After that, if you go forward, it is one more month back. So you'll get 18/7/2021. How many of you understood now? Previously, you had not understood. Okay, that's it. Will you copy this? Will you copy this? Quick. Ayyo. Will you write one more test on depreciation if that paper is lost? What? So lazy to write once again. Copy fast, copy fast. Sinchana is talking too much. Write fast. Okay. Faster, faster. What? Didn't write the table. You are actually supposed to do it on your own. You are supposed to do it on your own. So far, we've done till illustration number 7. We have an extra question. We've done till illustration number 6. 7 done. 7. This is the 7th one. I have given an extra question for you people to try. Will you try? Very similar to the one that we've just done. It is there within your material. Within the Excel sheet, it will be there. Please do try solving this question number 3. Extra question number 3. And now, let me take you all to question number 8. Question number. This is interest on drawings competition. In a partnership firm, for a partner, whenever he withdraws money, we compute interest on capital. See, A and B are partners. These are the dates. These are the drawings that they've done. For this period, we compute interest on drawings under product method. You would have done this in your PU. You remember? From each of, see, we should compute interest. Year ending is 31st of March. Date of drawing is 1st of July, 30th of September, 1st of November, and 28th of February. From 1st of July to 31st March. From 30th September to 31st March. From 1st of November to 31st March. And 28th February to 31st March. We'll find period. And we'll do that period into amount. We'll get total product into 1 by 12 into rate of interest. You find interest that way. Have you done this kind of question in PO? For the same concept, we can use average. For the same concept, we can find how. For these dates, take the earliest, that is 1st of July. And for this amount, find average. We'll arrive at one date. On that date, partner has to pay the entire money back to the firm, so that he doesn't have to pay interest. Has he paid so much? No. From that average due date till the date of year end, that is 31st of March, you find interest. That will be the answer. From that average due date till the year end, 31st of March, you find the interest. That will be the answer. Shall I show you how it's done? Come on. Tell me the details of partner A. For partner A, year ended 31st March. What is the date of drawing? 1st of July, 30th of September, 1st November, and 28th of February. Then we have amounts. What are the amounts? 500, 800, 1000, and totally 2700. Wrong. Earliest. Okay, we'll do our this method. What do you say? Product method. How you did in PU? You do it from the date of drawing till the year end. 1st of July to 31st of March. July, August, September, October, November, December, January, February, March. How many months? I'll write here 9 months. It is in months. We'll write it in months rather than doing this. 30th of September to 31st of March. October, November, December, January, February, March. 6 months. Then 5 months. Then 1 month. Now find the product. 500 into 9. 800 into 6. 1000 into 5. 400 into 1. Take the total. We were actually supposed to do 500 into 9 by 12 into how much percentage? 6%. So 800 into 6 by 12 into 6%. 1000 into 5 by 12 into 6. We were supposed to do like that. Divided by 12 and into 6% is common, no? So we'll multiply it, find the total, and that 14,700 will divide by 12 and multiply by 600. Sorry, 6%. What do we get? 74 is the interest. Did you all get this? This is how you find interest under product method. Which method? Usual product method. But we can apply the concept of average due date to this. Shall we? Now, let's see how to apply average due date concept to this. Data is 1st July, 30th September, 1st November and 28th of February. And amount is 500, 800, 1000 and we will take 1st of July as base date. 1st of July to 1st of July, 0. 1st of July to 30th of September. July, August, September. How many months? 3 months. 1st of July to 1st of November. July, August, September, October. How many months? Then 1st of July to 28th February. July, August, September. How many months? Okay. Now do 0 into 500, 0. 3 into 800, 2,400. 4,000, 3,200. Together. 7, 8, 9. 9,600. Here amount will be 2,700. Let us find average due date. Base date is 1st of July plus 9,600 by 2,700. That is 3.5 months, not days. 3.5. 1st of July plus 3 is 1st of October. 0.5 means 15 days over. 16th of October. Correct? Now, July beginning we are. July, August, September. 3 months will be over. And in the 4th month, half. Half of it is 15 days over. Remaining is 16th of October. Do you get this? Average due date is 16th of October. Date of payment. Has he repaid the drawings money? No. Even on the year end it is outstanding. Year ending is 31st of March. We'll compute interest till 31st of March. We'll compute interest till, did you understand why till 31st of March? Very good. October half month. November, December, January, February, March. 5.5 months. How many months? 5.5 months. Period of delay is 5.5. Or you can compute days. You can compute, what is the days that you get? 16th of October. October has how many days? 31. So 16 gone. 15 in October. Plus 30 in November. Plus 31 in December. Plus 31 in January. 28 in February. 31 in March. 160. We'll compute interest. Interest rate is, total amount is 2,700. Interest rate is 6%. 2,700 into 6% into 166 by 365. 74. Same we had got in the previous case also. So whether you apply product method or you apply average rate, you will get the same answer. Did you understand the application of this? Everyone? Similarly for partner B, can you do it at home? Very good. Can we go to the next question? 8th one pakka? Easy? Very good. Now let's do 9th one. 9th one is similar to the one that we did then. We did X and Y. X sold goods to Y, Y sold goods to X. Similar to that is green and red. Come on, let us solve question number 9. Question number 9. Green and Mr. Red had the following mutual dealings. Purchases by green from red. Sales by green to red. So we'll write one table for the 6,000, 2,800 and 2,000. We'll write one table for 6,600, 2,400 and 500. Two separate tables. Why? Here purchased by green. So green has to pay money to red. Here sales by green. So green has to receive money from red. Understood? Purchases by green. Sales by green. Tell me the data. First one. Purchases by green. 6th of January. 2nd of February. 31st of March. Okay. Have they given period? No, nothing. So same day it is due. No credit period also. Amount 6,000, 2,800. Similarly, sales by green 10th January, 9th March, 20th March. Amount 6,600, 2,400, 500. Got it? Now, base date among all of them is 6th of January. Can I write 6th of January as base date? Earliest. So this will take 0. 6th of January to 2nd of February. January has how many days? 31. January has how many days? 31 minus 6. 20. 25 days in January plus 2 days in February. You are straight away telling the answer. I am asking how many days left in January. Left 27. 6th of January. So 31 minus 6. 25 days in January. 29 days in February. 31 days in March. Sir, why 29? 2008 is leap year. Similarly, 6th of January to 10th of January. 4 days. 6th of January to 9th of March. 25 days in January, 29 days in February, 9 days in March. 63. Then 6th of January to 20th of March. 25 days in January, 29 days in February, 20 days in March. 70. Okay, now multiplication. 0 into 6,000. 0. 27 into 2,800. 85 into 2,000. 1,70,000. Total 2,45,600. Here 10,800. Here 10, 11,500. Sorry, 9,500. And multiplication 400. 63 into 2,400. 1 lakh. 74 into 500. Tell me the total. Now shall we take the difference? Listen to me. When you do 245,600 minus 214,600, you should do 10,800 minus 9,500. Let us say this was 12,000. Don't do 12,000 minus 10,800. If you do 12,000 minus 10,800, then you should do 214,600 minus 245,600. Are you getting the logic? If you take difference A minus difference B, you should take total A minus total B. You cannot do total B minus total A, difference A minus difference B. No. If it is minus minus, it will get cancelled out in division. Don't worry about it. So let us write 10,000, 2,45,600 minus 214,600. 10,800 minus 9,500. Base date 6th of January. What do we get? 6th of January plus 31,000 divided by 1,300. 23.85. 24 days. That is 30th of January. This is the average. This is the. Now, on the average rate, who should pay whom? Think. Purchased by green. So, green has to pay 10,800. Sold by green. So, green has to receive 9,500. Green has to pay 10,800, receive 9,500. Difference is 5,000. 1,300. Should green pay or receive? Very good. Green to pay 1,300 on 30th of January. See here. Green has purchased goods worth 10,800 from red. Green has, so amount payable is 10,800. So then green has sold goods worth 9,500 to red. So amount receivable is 9,500. Now net amount is how much? 1,300. Did you get it? Green has to pay red 1,300 on 30th of January 2008. Easy or not? Pakka? We have one last concept. 10th one. Can I give homework? Same to same like 9th one. Mohan and Sohan. Sorry, Sohan only, no? Manoj and Sohan. Very similar? Yes or no? Okay. Last concept for the day. Last concept for the day. Shall I? Listen to me carefully. Now, when we're trying to find the average, when we're trying to find the, what are we trying to do? Let's take one simple question and then see. Let's not take this also. We'll go back to one easier. We'll go to the first question only. That will be much nicer. You have the entire data also with you. You know it by date. See, 500, 800 and 1000. So I do 3rd of January into 500, 2nd of Jan, sorry, the date multiplied by 500 multiplied by 800 multiplied by 1000. And I get the product. I am again dividing it by 2300. Let us say this is A. Let us say this is B. Yeah, let us say this is A. This is, what we are doing is AB divided by A. A will actually get cancelled, no? A will actually get cancelled, provided amounts are same individually. Here this is A, same amount. It is not 500, it is 1000. Then it will get cancelled. Why did we do into and then divide? Because amounts are not same. Because amounts are not. Do you get this? So when the amounts are same, let us say every period whatever amount that you need to pay is same, 1000. Then it is of no use. You don't have to consider that amount in computation. You don't have to consider amount in. If you go back, initially when I told how do you find average due date, I told you know, for each date you will assign one value, number. We'll take the average of that numbers. But that might not be correct because amounts are different. If amounts are same, we don't have to take amounts into consideration. Amounts are throughout same, no? Every installment amount is same. So it will not have impact. We only have to find the average of dates. Do you get this? Yes or no? Very good. Come on. Using this concept, we will do the next question. That is where a loan is taken and the amount has to be paid at periodical intervals. I'll make you do a couple of example questions and then we'll do the question in the material. I will not straight away show you the ICA answer. I will do 2-3 different ways of arriving at the answer and then I'll teach you the ICA method of answer. Can I? Okay. Read this question for me. Hey, what I'm going to do, first method will give correct answer. But that's not how ICA does it, okay? Don't become too comfortable with the first method and then say I will do like this only in the exam. Just to arrive at that ICA's method, rather than teaching it to you as a different method, I want to teach as a same method. It's not a different method. People learn 2 different methods. I'm telling you it's not a different method. It's the same thing. But can be improvised little. I'll tell you how. Rupees 10,000 lent by Das brothers. Das brother is the lender to Kumar and Sons. Kumar and Sons is the borrower. On what date? 1st of January 2006. Is repayable in 5 equal annual installments. How many equal annual installments? Very good. Commencing on 1st of January 2007. This is principal to be repaid. Principal of 10,000 is there, no? It should be repaid as 2000, 5 times. How many times? Very good. Commencing from 1st of January. Commencing from, so 5 annual payments. So first payment is 1st of January 2007. Second payment. Everyone open your mouth. Open your mouth and answer. Second installment. 2008. Third one. Fourth one. Last one. Okay. Now observe this. You only told me this. 1st of January 2007, 8, 9, 10, 11. We need to pay what amounts? 2000. Let's identify average due date for this. Shall we? Without interest, we are doing only principal repayment. We are doing only interest has to be paid till the date of repayment. That will compute separately. That is not our area of concern at all. Okay. Base date is 1st of January 2007. Here period is 0. Here I can write 12 months or I can write 1 year. Can I write 1 year? 1 year. 2 years. 3 years. 0 into 2000. 1 into 2000. 2 into 2000. 3 into 2000. 4 into 2. 8 plus 6. 14 plus 4. 18 plus 2. 20. Here total amount. If I find the average now, it will be 1st of January 2007 plus 20,000 by 10,000. Don't skip steps. Don't skip steps. Till 20,000. Open your mouth. I talk for 10 hours every day. You can't talk for 2 minutes every day to tell your answer. You want to tell shortcuts. Next time I will tell average due date straight. Look, you'll show the question and I'll say average due date. How much is it now? 1st of January 2007 plus 2 years. That is 1st of January 2000. Straight away it will be added to year column. Do you get this? See, here we added what? Years. Now, instead of multiplying it with this, arriving at this, and then dividing again by this. I'll tell you the shortcut. Take the total of the period, divide it by 2. Sorry. Divide by 5, number of installments. What do we get? That's it, no? See, what you are doing, no? You are first multiplying, then you are dividing. First you multiply, then you divide. It will get cancelled out. First you multiply into 2, into 2, into 2, into 2, then divide by 10. It is same. It is exactly same. It will get cancelled out. Numerator, denominator will get cancelled out. This is possible only if amounts are same. If amounts are different, it won't get cancelled. So you should multiply, so you should divide. When can you apply the shortcut of not writing amount column, not writing product column? Only write period, take the average of period. When can we do this? Amount involved in each date is very good. Each date is pakka. Now I'll do the same problem like I just taught you. What did I just tell? I wrote 1st of January 2007, 2008, 2009, 2010, 2011. Period. This is base date. 0, 1, 2, 3, 4. Totally 10. You know what will I do? I'll take base date 1st of January plus sum of the period divided by number of installments. People learn this as a separate formula. For us, it is not a separate formula. Did you understand that it is not a separate formula? 1st of January 2007 plus 2 years. That is 1st of January 2000. Did you understand this? But ICI doesn't do like this. You know what do? Sir, they do like this. No, they don't do like this. But they'll improvise a little more. Only thing that they do is 1st of January 2007 we are taking as base date. They won't take 1st of January 2007 as base date. When is the loan taken? When is the loan taken? 1st January 2006. They'll take 1st of January 2006 as base date. Will the answer change? By changing the base date, will your answer change? You take any year as base date, you will get same answer. Then you know what will happen. It will be 1, 2, 3, 4, 5. What will be total? 12. Hey. 5 plus 4 plus 3 plus 2. 5. 15. Correct or not? Divided by 5. 5 installments, no? Sorry, it's changing. You will add it to base date. Base date is 1st of January 2006. It will get compensated there. Here you get 1 year extra. There you are 1 year behind. Sir, I want to take 2000. Hey, I am not kidding. Take 2000. 2000 is base year. 1st of January 2000 is base year. 7, 8, 9, 10, 11. Add 7 plus 8 plus 9 plus 10 plus 11. Divided by 5. Add 9 to 2000. 2009. You can take any date as base year. Sir, I want to take 2050 as base year. Take. Yeah, take. Everything will be minus. Correct? That year period also will get minus. From 2050, you should minus so much. You will come back. Do you want me to show taking 2020? You will get. Here it will be 9. This will be 10, 11, 12, 13. 13 plus 12 plus 11 plus 10 plus 9. 9, 10, 11, 12, 13 divided by 5. What did you get? 11 from 2020, 2009. Minus. Oi, minus. Are you getting it? No matter what here you take as base, answer will not change. Because coding and decoding. See, if you name A as 1, B as 2, C as 3, you write cab. What do you write? 3, 2, 1. When you decode it, 3 will be C, 2 will be A, and 3, 1, 2 you will write. Are you getting it? We will rename it. We will give A as 3, 1 as B, and then 2 as C. Then again coding, decode the same logic if you apply, you will get the same answer. No? Correct. You did coding, decoding in logical reasoning. Logical reasoning, not to. You would have done that. No, that numbers you write and then that only. Hey, you people. I'm just telling you. That is the coding, decoding I know. Did you understand this? Based on this, we'll do illustration number 11. 11 Allah. 11 Allah. 11 Allah. 12. 12. 12. 12. Have a look at 12th one. 11th one also we can do actually. Oh, but amounts are different. We'd have to do it in normal way. 11th one we should do normal way. Do 12th one. Saurav lent rupees 25,000 to Rahul on 1st of January 2005. Amount is payable in 5 half yearly. Half yearly means every 6 months. Equal installments commencing from 1st January 2006. Listen, I will take 1st of January 2006. Half yearly is 1st of July 2006. 1st of January 2007. 1st of July 2007. 1st of January 2008. Should I take amounts? Don't even take. Veda. Why? Equal, no? 555. So we'll ignore. Base date is 1st of January. If you take 1st of January as base date, 0. We'll take 1 nenge. 1 nenge. So 6. Or you take 0.5. 6, 12, 18, 24. What do we get? 30, 30, 60. Base date of 1st of January plus 60 by 5. 12 months. That is 1st of January 2007. So 12 means 2 years, Salva. Oh, Nimurali 12 means 2 years. Namurali 12 months means 1 year. This is how we did. But ICA doesn't do this. What do? They won't take 1st of January 2006 as base date. 1st of January 2005 as base date. So this will become 12. 1 year. 1st of January 2005 to 1st of January 2006 is 1 year. 12, 18, 24, 30, 36. 120 divided by 5. 60. How much? 24. Add 24 to 1st of January 2005. 1st of January 2007 only. Are you getting it? Let me show you the ICA approach. ICA recommended approach. They take 1st of January 2006, 1st of July 2006, 1st of January 2007, 1st of July 2007, 1st of January 2008. Amounts are same. Don't consider. So, but base date is 1st of January 2005. Wait. This is base date. Now tell me, year base period will be 12. L 20. Ide tappu. How much? 18, 24, 36. What do we get? 120. Average due date is 1st of January 2005. Sum of period divided by number of installments. 1st of January 2005 plus 120 by 5. 24. 1st of January 2007. Did you get it? Actually, the topic is over. There's nothing else left. Next question is the easiest question in the entire chapter. You know why? See, there are 3 transactions. They want you to compute average due date. And the whole amount is paid on 31st of March. They want you to compute interest at 5%. After you find average due date, from average due date to 31st of March, interest at 5%. Did you get it? 14th one is even more simple. They've given the average due date also in the question. They've given, no? Average due date is also given in the question. If he pays on average due date, how much interest should he pay? Nothing. If he pays on 28th of August, 18 days after average due date, compute interest, add it to the principal. Here is paying on 29th July. So he is paying before average due date. How many days of interest? 12 days of interest will be saved. Compute 12 days interest and deduct it from the principal. Did you get it? This is the topic of average due date. Easy or not easy? For the missing questions, I will update the solution in your material only. Here only I will update the questions, solutions for the remaining questions. I want you to genuinely try and then practice and update. I think not much is left. Another hour if you spend, you will finish writing, and reading of this chapter also will be over. You don't have to separately read this chapter when you solve these questions. Got it? Tomorrow we'll start with account current. Tomorrow's objective will be to finish account current. And listen to me, listen to me, listen to me. In order to ensure that we finish account current in time in tomorrow's class, I want you to again be very clear with computation of dates, bills of exchange. If you are still finding it difficult, read it today only. How to find due date, how to find maturity date, how to find the bill period, how to add the dates, how to close the door, how to add the dates, how to arrive, when to add 3 grace days, when not to add 3 grace days. All of that you should become comfortable. Last row, listen, I'm talking. You should become comfortable with that. Unless and until you become comfortable with that, you won't be able to do account current also tomorrow. Account current is, we have our topic of ledger, we have topic of due date and everything, both together. Both together. For the questions that we're going to solve tomorrow in account current, you can actually solve that question using average due date method also. For the same questions for which we're preparing average due date, we'll be doing account current tomorrow in class. So I'll tell you why does account current come into picture. Many of them learn it as a separate unit. Actually, account current is extension of average due date. For the same problem of average due date, you can prepare account current. For the problem of account current, you can prepare average due date. Many people say, hey, average due date, account current, account current. Yenilla. Same question you can do both. I'll show it to you tomorrow and then I'll prove answer under both the methods to be right. And I'll also tell you the reason why we do account current and what is the reason why there is a separate unit by name account current. Got it? Not too many questions, about 6-7 questions to be done tomorrow. But it will be the proper ledger format with 3-4 columns extra. What is it? 3-4 columns in debit side and 3-4 columns in credit side. So I hope you people understood the topic of average today. Did you? Okay, great. I hope you also had a little fun today. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you people are learning something, you're having fun. It's all good. The day you guys either you stop learning something or stop having fun, trust me, you might start struggling because you might be na. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for you people. Are we in the game? Are we in the game? Are we in the game? That's it, guys. Bye bye. Take care. See you all. My yes. Sit. Sit, sit, sit. Oh, before even I say, then I'll not say. Then Matya Samachara. Did you guys learn something new today? Did you guys have a little fun today? Now get up again and start from the beginning. Okay, that's it, guys. Tada, bye bye. Take care. See you all tomorrow in the morning. Till then, have a great time and cheer for India today. Yes. Okay, guys. What? Bye bye.